Now, I hope that you can hear me. If not, that's just how it goes. So just trying it out. I set one of my resolutions this year is going to be that I do every Monday. I'm going to do a live video and be absolutely vigilant with it. Even if it means that I'm sitting out here in the rain, still on holidays, as you can see. I'm all set, ready to go and read my book and maybe make a nice cup of tea and just be settled in for the evening. I found some really nice books here at this holiday place where I'm at, up on the north coast of New South Wales, Australia. Is a lovely place. I've got some beautiful literature here, an old book of Ernest Hemingway short stories. It's given me a chance to think. It's really good. You've got to get away and think. I know everyone says that. It's true though. I mean, everyone knows that it is true. That's why holidays exist. That's why they are what they are. Try and keep it together. But to business. Look, the end of the year happened, and it was a pretty good push into the end of the year. Staying fully invested was absolutely the right thing to do, and that we went okay. The standard balanced account that I manage put on 17.04% after costs and including dividends, and not that there were many dividends this year, but that still counts into it. So that's after costs at 17.04%, which is fantastic. Actually put on about 1% or so just in the last week of the year, which is great. So that's what is really important. The difference between 16 and 17 is really important. You've got to get there. You've got to squeeze those last ones out. So that's how that went. So really happy with those results. That's okay. But last year, it's gone. Put a line under it. It's out of the way. So now it's time to move on and look at 2021. What will 2021 bring? First and foremost, we've got a couple of trades tonight. Netflix is coming in. Netflix is going out. Mercado Libre is coming in the States. Fiserv is going out. And Dexcom is going in, DXCM is going in. So anyone who's trading those ones, and that's what you've got to do. One change of the Australian market today, Worley goes in exchange for, and it's coming to me in a second, ALX, the toll road guys, the code that I had a second ago. It's, ALX, that's right, Worley in, ALX out. So that's good, and that's going quite well. So we're doing a few percent that's improved on that quant strategy, which is going really well. The one in the States, compared to the Nasdaq, is just beating it. It's done about 20% since we went inception. Really happy with the results that are on that one. So beware and get a part of that if you can. With regards to our global rotation strategy, we've got our take profit signals that happened on 3 of the 4 ETFs that we hold on that. We've got one that's just popped in last week, FNI, which is Chindia. We've opted not to go into that because it was the end of the year and a bit too choppy, not enough days to really say that it was set. However, it has gone quite well. So anyone who wants to be a purist, that's a great way to go. Chindia. Speaking of that, now let's talk about the year ahead. The renminbi has continued to appreciate, which is amazing against the US dollar. Really, 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 really good against that. Now, the US dollar is obviously going down, but it does show that there's a really good emphasis and really good effort going into Chinese market, the Chinese currency, and Chinese rebound and re-emergence again after all this COVID stuff. They're the first in, first out, and you can have all the scandals and all the nonsense that you want to say. The fact of the matter is that they dealt with it, they're out of it, they're now on the other side of it, and they're going to grow and they're going to do well. So that's fantastic for them. And fantastic for investors in the space. We own the ETF Asia, ASIA, which has all the Chinese tech stocks that's in it. Apparently Jack Ma has gone missing though, so there's something very interesting that's in that one, so beware. Alibaba, not a stock that I really want to own, but currently it's looking really, that's an ethical thing for me, Alibaba, but that's just how it is. But Baba looking very cheap at the moment where it is. So those Asian stocks going great, more money going into there. I still stress that for 2021, the biggest theme will be emerging markets. I want to be a part of that. I want to be part of the emerging markets. So Chinese coming back up. Chinese emergence is going to drag the rest of that emerging market space around Asia, around Southeast Asia. All of those other companies and all those stocks around there will do well as well, provided that actually happens. So be prepared for that situation should it occur. You want to own those peripheral stocks around there, and some of them are big. I own some very, very large stocks and some listed investment company that owns some very large stocks. So you wouldn't think they're not emerging market stocks, but they'll do well from emerging markets. So be aware of that as well, which is great. So that's the renminbi. We've talked about the quant stuff. We've talked about the emerging market space coming back up. We're talking about the Australian market that today put on about 1.4%. So automatically, you've got to be fully invested if you're going to catch any of this thing. You can't take a day off. You can't take a holiday. You can't think I'm going to attack this. If you're in the market, you're already 1.5% behind. So it doesn't matter if you're on holidays. The market doesn't care if you're on holidays. It doesn't care if you're on a beach. It doesn't care about the palm trees and everything that's behind you, but this is a very nice place to be. And I continue to stress, we're talking about the local economy here in Australia, that allegedly, although I can't attest to this, I don't know where it's all gone, but I've got things that I need to spend my money on, but apparently Australians have got record savings all saved up, and they're ready to get out there and spend them as everything reopens, and they are doing so. New South Wales had a little flare-up just recently in their COVID, got it knocked down to zero again. The cricket's on in a couple of days. It's going to be something else. Interesting to see what will happen in that one. So as everything reopens back up again, and what goes on. So look, those are the main things that's going ahead. Stay fully invested. Make sure that what you're in. But I honestly don't think that it's going to be as easy to make money. Now, keep in mind, 2020 was not easy to make money. We had like a 40% drawdown at one particular stage, and that was something that you really had to manage. The fact that we came back up and put on almost 20% is something else, especially in this environment that we had. It's not going to be as easy to just buy and hold and just sit on it and just go, it's going to be okay this year, because there's going to be a rotation that continues out of the growth stocks and out of those things into that value side. I do believe that that's where that's going to happen. So as that moves into value, you're going to need to know which ones you want to hold and why you're holding them. You know that old expression, you can't just buy an index and just think it's going to be okay. So watch that rotation as it happens. As the regrowth trade actually does kick in, you're going to see inflationary pressures, potentially rise. And because inflationary pressures potentially rise, whoever it is that does it, it means that potentially that then real rates are going to go up, and that steepening yield curve means that value stocks go up. It also means that growth stocks get valued down. Simple as pie. Doesn't get any easier than that. Those growth stocks, those crazy tech stocks that have been trading on free money, zero, you can value them at a basically zero interest. You can value them on free money, which means that they're being valued at stupid, lofty amounts. As real rates tick up, it means that the cost of borrowing is going to be a bit more. That's going to start to come down a bit. Those valuations just start to get tweaked around. Those value stocks that do well on rising interest rates, like banks, like things that are just cheaper, they'll come back up again too. And the rebalance will continue to happen. So that'll be 2021. So you won't just go, okay, I'll just own Tesla, it's going to be easy, it's a piece of cake. Although it's worked so far, why wouldn't it continue to? Anyway, but that just means you're going to have to be on top of what it is that you're doing. And be really selective in the sectors and really selective in the themes that you're going to be a part of. I think that space will be a big part of 2021. I'm just saying that out loud. I really do think that space will be a big part of 2021 as we continue to venture into the stars. There's no more American risk really that's being seen ahead. The Georgia runoff race, if the Democrats get 2 seats, that's coming up very soon. If the Democrats get the 2 Senate spots, then it means that Biden can move through their tax changes, so that's probably going to cause a little bit of a detriment. It's going to cause a little bit of a detriment to the market as revenue numbers do come off. So just be aware of that if 2 Democrats do get in. However, it does mean that crazy spending can come into the market, which means that probably will then be able to help stimulate the market. But it's probably going to be more money's just sort of being pumped into the American consumer if the Democrats get 2 spots up. They need 2 spots to be able to take control of the Senate, because then the vice president has the casting vote on Senate votes, and that means that they can go through. So it's pretty much the blue wave that everyone was fearful of. It just means that gold is an absolute standout buy more than anything else. Buy gold, buy gold. When they're printing money like that and giving it to the consumer, you want to buy gold, and then obviously you're probably going to want to buy those consumer stocks as well. So just be a part of that too. Look, that's all I've got to say. Stay invested. This is my first Monday. We've done it. I'm still going to do it. Even if we're on holidays, I'm always going to keep on doing this. I'm going to make a really, really good schedule and really good routine of this one. So thanks very much. Have yourself a great day, and a Happy New Year to everyone as well. So thanks very much. Bye.